And I guess now we're recording. Hey, good morning. It's about 3 hours before the open of trading. Happy day. Welcome to QuantBox Live, where we uncover the best global fundamental opportunities. We look at market sentiment, what's happening right now, but we also look at macroeconomic data. What has been, what usually is, and then what is the economic reality of every major economy around the world. And then, of course, you have to compare and contrast if you're going to make informed investment decisions. So we got lots of pretty colors that tell you lots of stuff. And maybe the greatest weakness of QuantBox, if you don't mind me sharing, is it's got so much information. It's so informative that you are kind of like a deer stuck in the headlights. Oh, well, cool. Well, we have a training course for that. So if you've never used a scatter plot before, we can teach you how to use a scatter plot. And right there you go. So there's a whole training course on that. But if you just don't understand GDP from your NFP, cool. How about a 16-hour macroeconomic course? So all this information is not for those that are logged in here and now. They are subscribers. I'm telling you this because, well, every so often I upload this video to YouTube, and I'm trying to convince those people that there's a better way to trade. Scalping is fun, but it's amateur. If you're going to be a success in this world we call trading and investing, you have to make informed decisions and your strategy is about letting your winners run. Well, you can't do that if you're not confident, and you can't be confident if you don't know what you're doing. So we could remedy that. Okay. So anyways, hey, I am doing a global outlook. I'm going to predict the next 90 days in advance. It starts in 5 hours. So if you're watching this on YouTube, you probably already missed it. And well, good. Okay. Yeah, good. Well, you should have been a subscriber. You should have been informed. You're behind. So that's your problem. What do you do now? I don't know. So let's get on with it. Because, right, let me remind you. Hey, do you like the bigger version? Let's do the bigger version. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money cannot afford to lose. So let's go pro. Okay. Okay, come on, load in. I know we're right now on the 10-year T-note, we're below 4.0. Okay, loaded. So the last when the market was last open, we closed at 4.02. The last I looked, we were at like 3.98. We're going in the right direction. We're going in the right direction. S&P 500 here closed a little bit down, but is now, when you look at overnight pricing, it's doing okay. Yeah, there's a little bit of bid on the screen. A little bit of risk on maybe is producing today. Oil shows up here, but I believe it is down from earlier now. Right, so you want to compare and contrast, you know, your overnight, your live 24 hours, 7 days a week trading platform. You have to compare that to the futures market. Euro dollar still about below 10, 110, and Bitcoin shows a little bit of down, but 45,000 is up. Why does it show negative? Well, let me put this into context. Over the last 3 years, the Securities and Exchange Commission has sent out probably 6 tweets about the necessity for protecting your data through two-factor authentication. This is where you log into, well, in this case, Twitter, and then they text you, and then if your phone is connected, then you verify that it's actually you, and you go through. The SEC has sent out like 6 of these tweets, like, you must do this if you're a hedge fund manager, right? You must do this if you're in the finance industry. Now, imagine also Every single audit they've ever done for the last few years, they're like, show us your security protocols, show us your written documents, show us your actual procedures. And if you don't have two-step authentication, they probably fine you. Deficiency, $10,000 fine. They must have, I'm guessing, because I don't know. They probably have done it 1,000 times in the last 2 or 3 years. So yesterday they got hacked. Do you know why? They didn't have two-step authentication turned on their Twitter account. So someone logged in without two-step authentication, let's say a year ago, and actually wrote, "You're bad if you don't have two-step authentication turned on your Twitter account." And they didn't. Like, it's just so government, isn't it? They've probably raked in $10 million in fines for things that they don't do themselves. It's just, oh, how could you not laugh at that? So, anyways, yesterday, somebody hacked into the SEC Twitter account because they didn't have the two-step authentication turned on. And somebody really, I think what happened is the SEC wrote a tweet to be released later today, probably at the close. And so it was sitting there in the account waiting to be sent. So somebody logged in and went, send, and they sent it a day early. All the ETFs are approved. What? So anyways, Bitcoin spiked to 48,000. We were at 44,000. And then, like, I don't know, a few minutes later, SEC came out and they're like, no, we didn't send that. So anyways, it's way down, but you're like, how could it be down 2.5% where, like, yesterday I bought it at 44,000, right? 44,000 something, right? $44,444.44. And like, how could it be down if we're at 45.50? Well, it was 48 for a minute. And I don't mean like, I'm working on my American accent where I say things like, well, it took me a minute, meaning a day, an hour. I don't know what a minute means anymore. So anyways, and just literally 180 seconds. I don't know. We're at 48,000. So anyways, what an interesting world we live in. Stock market, mostly. Oh, let me zoom in for you. Okay. Stock markets around the world. Come on now. There we go. Most have recovered except the terrible, ugly FTSE. Okay. I'm looking at this. I'm looking at that. Everything looks like up, flat, and FTSE down. So everyone's winning except the UK. Short term, nothing going on yet. Let's look at medium and longer term. Nothing to do, yo. Very, very difficult. So the only things you're able to catch are things that are sort of out of position, but still really not going anywhere. So, like, maybe you bought Bitcoin a couple of days ago, or maybe what did I buy? Oh, I bought NASDAQ. Was it yesterday or the day before? I can't. It's being a currency trader. It's so difficult. I lose track of time. I guess it was yesterday. Honestly, it seems like a million years ago. I bought some NASI exposure yesterday. Why did I do it? Well, I showed you in various videos that we were sitting on the monthly central pivot. Now, I didn't really want to buy, but I'm a bull, so I'm kind of obligated. Wasn't a big bet, but other than that, there's nothing going on, right? So it's only like if you could pick up what you want to buy anyways at a logical place, bulls buy low, bears sell high. So if you can get that trade on, you understand there's on the short term, it's probably going to be mediocrity. And maybe it produces some alpha later or some upside later. But on top of that, it could actually just lead to break even and then move further out of position, or just really it doesn't do actually anything. Well, so I'm doing that. Mentally, I don't expect anything, but sometimes you're just obligated because you were presented quite obviously, let's say, January's trade setup, which is your normal standard operating procedure strategically, But knowing things like seasonality in QuantBox, so QuantBox shows you the 20-year norm, and you're like, well, normally this doesn't work. So you take it because it might work. It is a legitimate setup, but with lots of skepticism. So you certainly don't go in big, right? Like, oh, the monthly central pivot point, 50% of my account, right? Well, there are better times if you're going to be a degenerate gambler. There's better bets than that. Oh, and I'll probably show you. There's upgrades to QuantBox Pro coming in. They're rolling in, and I did one of them myself. I did one of myself. Little me. Yeah, I made a change, so we'll get there. In fact, why don't we just do that now? I threw that in seasonality. And what I did here, so this isn't a real asset. This is just, okay, because you have to select your asset here. Okay, which is nice. But nonetheless, so don't pay attention to that. But, well, it's all related. Okay, there's whatever asset this is, and we don't even know what it is. It's just some random piece of data. But you can see there's seasonality on this asset. The beginning of the year is up, and then it flattens out, and then there's some up, and then it flattens out for a long time, and then around September it goes back up. Cool. That's the 5-year and the 20-year. Okay, great. Here's what I did, little old me. I made this a little bit prettier. I think it's prettier. Remember, it was ugly blue and all that, and it was just a little chunky. So I cleaned it up. This hasn't changed at all, except I changed the color. I separated the weeks a little bit, and I did the outline. I think the outline's nice. So there is the shape of this asset over the year. It's just this. But what it's looking at is all these weeks up. You see, like there's some ups and some downs, some up weeks and some down weeks. This is accumulative. And by the way, I looked it up. I did spell it right. Huh. Well, there you go. That is a real word. I wasn't sure. I'm like, is it cumulative or accumulative? And anyways, I was doubting myself. But nonetheless, so what it's doing is add up, like 0 plus 0 is 0, plus a little negative is a little negative, plus a little positive is back to 0, and then a little positive is a little more positive, and a little hardly any positive is still a little more positive, and then a little more positive is more positive. And so what we're doing is we're looking at these weeks and we're just adding them up. Negative, a small negative, plus a big positive is a slight positive, right? And so this is the shape of this asset over the year. Okay, that hasn't changed. It's just, I think it's easier to read. And I kind of like it because I got the numbers, the weeks to almost line up perfectly. Okay, that took a little bit of work actually. Now, here's the genius, the genius. I changed this. Okay, this is okay. The data hasn't changed. I just changed the way to present it. This is over the last many years. When you look at what happens in week 1, we've looked at all the week 1s going back many, 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 many years. And when you add them all up, what usually happens? Is it a good week? Is it a bad week? Well, turns out you can't see it because, well, usually the first week there's not a lot, right? And so anyways, second week, there's a down. Or no, wait, the first week is a down. The second week is an up. The third week is flat. The fourth week is down. The fifth week is slightly up, 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 up. Very nice. And of course, when you add all these up, you get this shape. Okay. All right. Now, here's the next level. So I just made it a little prettier. But then I did 2 standard deviations. At first, I did 1 standard deviation. Do you know what percentage 1 standard deviation is? 68%. 2 standard deviations is 95%. So I threw down 2 standard deviations to show you when you look at the individual weeks, are they bullish weeks or are they bearish weeks? And I threw down 2 standard deviations, which means 95% of the time the weeks stay within that range. So anything at two standard deviations or even outside of standard deviations is incredibly overbought or incredibly oversold. Okay. Incredibly. Like in the top 5%. And then, you can see this week was very, very dramatic, right? So now we're talking like 1%. It's so far out, it's an outlier. So, anyways, what it ends up telling you is two standard deviations below the average seems to be a good opportunity to buy. And then later you get two standard deviations above, probably a good opportunity to take profit. Then she comes down, maybe some profit taking here, right? Down, down, down. Maybe this is when you buy the asset. Maybe you buy a little more asset. Maybe take some profit. Okay. Maybe take some more profit, all that kind of stuff. So it really shows you when the market is way overbought or way oversold relative just to the week over week relative change. Okay. So an incredibly bullish move leads to profit taking. So look at this. After like let's say over here in week 12, you bought it. Week 13, you're making money. Week 14, you're making money. Week 15, you're making money. Week 16, you're treading water. Week 17, you're treading water. Week 18, you made a massive amount of money. And then you can just see the profit taking comes in. Week 19, down. Week 20, down. Week 21, down. Week 22, way down, right? And then we start the journey again. So bulls buy low. That's the other way to look at it. Okay, below the water line is bulls are getting ready to buy, and above the water line or near the red line is profit taking. I don't know. Again, maybe it helps. Maybe you like it better than it was. Okay, and what you're supposed to be doing is to predict the future. Things like the yield on the 10-year T note. Oh, well, we have 5-year and 20-year averages, and I can show you the shape. Look at this. Now it's pretty, huh? Look at that. Touches the green line, tends to go up, touches the red line, tends to go down. Buying opportunities, profit taking. Cool, right? And there's the shape of the year. I mean, it's pretty, right? It's better. Huh? Yeah, not bad. Not bad. Yeah, cool. So, nice. Cool. All right. So let's go back to our scatter plot. Bitcoin way down. Bitcoin way down, but remember all those yens were down here? And I was explaining very often that that's your dip that you're looking for. When it's bearish but unexpected, that means there's a bullish trend, but prices are down right now. Cool. Well, now they're all up. By a lot? No. Okay. Now look at all these things. These are still, that Swissy is still weak. And there's a little bit of bid on gold. So I think a lot of this story is the Swiss franc is weak right now. So it dragged all this up. Yen is weak. And then so the yens are up. So cool. It's still the old calendar. There's a new calendar coming, by the way. Been yelling at the developers for months now, and they have a radical new idea. And I'm like, just do it. Let's try it. If they can't do that, I'll license a calendar for somebody. Oh. Today is the 10th. Oops, I guess I can just do this only. Okay. Aussie monthly CPI. 4.3. Little elevated, huh? European industrial production, 3%. Yeah, it was 10, huh? We looked at other numbers, or we had other numbers from Europe over the last few weeks, and it just shows like industrial production in Europe right now is just terrible. Like, look at year over year, down 12%. Does it matter? Well, let's just pretend there's a relationship between your productivity is down 12%, but your profit margins are 5%. Are you making money? Probably not. Because when you have, let's say you own a company that does industrial production, you own a factory, right? How much of your costs are fixed? You have to rent your land, right? All that kind of stuff. You probably have leases on all your equipment. Do your equipment lease companies care how much you use the machines? You're only using it 80% of the time? No, they don't care. If you pay me, right? So, yeah, you drop 12% productivity. You have so many fixed costs, right? That you're just bleeding money. Yeah. Well, there you go. Boop, 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 boop. European unemployment, 5%. Wait. Mm-mm-mm. Silly calendar. EIA today. Yeah, it must be Wednesday. Yeah, I guess it is Wednesday, huh? All right. So apparently, US inflation is not a big deal. But yeah, we do have inflation data today, is what I'm trying to get at. So boo hoo calendar. But yeah, so we have some US inflation data coming out. Mhm. Let's see if I can. Let's just do high only and see if we can get it to print properly. No. So, anyways, boohoo calendar. You're going away. Maybe today's your last day, calendar. So, anyways, yeah, am I right? We do have inflation data, right? Let me go to. Let me pull up. Use FX Street's calendar. Buddies at FX Street. So maybe I'm just wrong. We don't have it? No, we don't have inflation today, right? We have EIA, we have wholesale inventory. So I don't even know what that was showing before low inflation. No, I don't see actually anything really that important today on the US calendar. So tomorrow is inflation. That's why. Okay. Thursday. Yeah. Thank you, Boris. So anyway, yeah, nothing really going on except European retail sales. Okay. And what they got 0.4. They got okay. So the thing is, retail sales is measured as receipts. They're in terms of euro. Um, Hang on. My company in Hong Kong needs to file something. Hang on. Hang on, lawyers. All right. Oh, 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 oh. So yeah, so I showed you seasonality. Okay, cool. So let's just kind of look at a couple of charts. The big news today, obviously, is related to the Bitcoin trade. So I think you'll see everything move. I think you're going to see all crypto move today, as Bitcoin may or may not become legitimate. Oops, that's Ethereum. Mm, 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 mm. Okay. And so here we are. I don't have to reboot my drawing tool. EpiPen. Okay. So yesterday we had like this. Let's draw it out. Okay. And I think I bought it somewhere in here. Thought it was a little lower than that, but maybe it wasn't. Maybe no. I got it down here somewhere. All right. So, anyways, yeah, it must have been a Monday trade. Anyway, so we had this, and we are coming back to the moving averages off the top, as you would expect, and then we had the move like this. Whoa! No. And now we're just back. So I don't think the SEC is going to release during the trading day. So it's going to come out 4:45 p.m. like that, I guess, or maybe 4:30. I don't know if it's actually scheduled or anything. If it is, then please confirm if I'm right. I'm just guessing on that. And the theory is, well, if you want to push Bitcoin to $100,000, this is your next opportunity for new. Because remember, to do it, you need new capital, right? And everyone that wants Bitcoin owns a Bitcoin. So we need new blood, right? We need fresh meat, as they say. I was listening to an interview with an institutional investor that has been investing into some of the Bitcoin ETFs that are out there that are more futures based, not cash based. And his trading experience as a professional institutional investor, now buying Bitcoin. So he's not like a Bitcoin guy. It's just now part of his world. And I think he's got a maximum of 6 months experience in the asset class, because before you couldn't do anything. And now he runs a book. So he throws some Bitcoin in there and he's very serious about it. But in his world, because there are rules and regulations and mandates that must be followed, Bitcoin's only existed to him as an asset class for 6 months. And probably today, okay, not only will you have futures, but you'll have spot in the form of ETF investments. Okay. And it's another wave of new money, because think about it. His money went into the market 6 months ago, right? Because for the first time he could place money into a Bitcoin vehicle. Well, where were we 6 months ago? Maybe it was 9 months ago. So I'll just say his world began either here or here. Okay, that kind of thing. And at some point, okay, so this is what I'm suggesting is new money, fresh meat, new investors, let's put it that way, that couldn't enter the world of Bitcoin, then entered the world of Bitcoin. And we're about to have something similar. And could there be another move? Yeah. I don't know if people are going to get flushed out first and have it come all the way back to 30,000 and then go up to 100,000. The market's tricky. But the logic is pretty straightforward. There might be $1 trillion. I don't know. I'm just making up a number. But there could be $1 trillion worth of people that have always wanted to get some exposure to Bitcoin, but were never allowed to, that are suddenly able to click the buy button. Cool. Cool. So I don't know, right? I don't know, but it is interesting. It becomes more and more legitimate. And if Bitcoin goes up, does it bring legitimacy to cryptocurrencies in general? My guess is probably with Ethereum, because I think Ethereum is special, like I think Bitcoin is special. And then the farther away you get from that, the less my expertise is, but I studied cryptocurrencies. And a lot of the use cases of these assets from when I took my class have radically changed. The real world has changed quite a bit. But you can see what happened. We recently had Bitcoin become a little more legitimate, right? So, right, down, 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 and I mean a lot. I went from like $2 down to 25 cents. Then we spiked up to 70. And now we're down here at 50, 51. Are we on our way back to $2 and beyond? Just because of Bitcoin? Well, this is the Bitcoin rally right here. So what I what I like to say is could be a rabbit, could be, right? And well, if we were going to use proper technical analysis, we'd say, oh, this 46, 47 area would be the logical number based on price action. If you were going to be a buyer based on pivot points, this number here at 49 something is pretty good. But the whole idea is we're in the pocket now. Okay. So now you got to go back into here and say, do you see a technical opportunity? Is it bullish now? No. Okay. But what's your price? And the rest is time. Okay. So, anyways, could be an interesting day. Could that move the markets? Yeah. 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 Definitely. And aftermarket. So, anyways, be careful. Lots of volatility. Okay. Like we had a $5,000 round turn on Bitcoin yesterday. And is that a big deal? Well, that's actually 12%. You're like in a day. Um, that could be terribly good, but terribly bad, huh? Anyways, let's go out to the commodities. Okay, and here's what I had planned. See, I like to trade more rationally. Okay, so we had all this planned out a long time ago. This 41 area was the buy. The first target was 46 and some change. Okay, down, roll reversal, up to 48 and some change. You know what? Both of those things actually happened. I mean, look, okay, we're splitting hairs now, right? It hit 48,000. Yeah, on fake news, but whatever. Still happened. And so now we wait. Cool. So anyways, cool. It's just analysis. Gold. Okay, we're pointing that up. Let's look here a little bit. We topped off of a top. We topped out on a top out, right? Top, top, top. Okay, we breached just briefly back in, and then yet another top. So a bear should be very, very interested. Okay, a bear should be very interested because if you get the opportunity, you can be in this a while. We just know it's a top. Now, I don't know if it's going to go higher in the next 2 or 3 months or lower in the next 2 or 3 months. I'll discuss it in today's Q1 outlook. But if you are a bear, that's a legitimate opportunity to seriously plan out. You just have to understand where you are on the map. You are at resistance and you're a bear. I think you're supposed to do something, right? I'm going to just stand here and wait to be rescued. Well, that's not how you make money trading. Standing there waiting, right? No, no, no. So, anyways, I don't know. There's something might be going on. So maybe if you're a bear, if you're a bull, you can if you're a bull, but like I pointed out, I don't know what a week ago, 2000 and 1950 are the two bullish buy prices. So we're just kind of getting down into that zone. Maybe Bitcoin pops it up. Yep. Maybe the stock market pops it up. Yep. But none of those have happened yet. Speak about the stock market. We should look at this. Okay. So we pointed out a few days ago that that was the monthly buy zone and the daily 21. Both are bullish. I said, based on the time of year, though, it's not clear if we're going to do this, but it could happen. Usually you don't have a big rally at the beginning of the end, but this year is quite unique. We have a couple of challenges, a Fed policy and an election. So maybe it forces people to deploy their capital sooner than usual. Cause and effect. Well, I don't know. I don't know what everyone else is doing. I can't go to all the different board meetings at every hedge fund and see, well, how are they going to handle the election, right? So, yeah, it could. If it was going to go early, it would be this year, but I don't know if that's the truth. So, la-di-da-di-da. Okay, so that's already happened. Great, thank you for the hindsight, right? No, 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 no. So what I pointed out, I think it was yesterday, is that when we were here, I said, your job now is if you believe in this, you buy the dip. That was the message yesterday. Okay, but that's a legitimate buy. It's not one you probably love, but it's legitimate. And then you go to the stock market, and the other thing I told you is not only do you need to buy the dip, okay, I said I prefer the NASDAQ. NASDAQ, so we were here yesterday during our session, and then it came down here, and I bought it down here. Why? Well, that's what I said I was going to do. That's what I had planned out. I mean, that was the plan, Stan. I don't like it. I don't love it. It just is. It's just an investment. It's just a trade. But what do you do if you're bullish on an asset long run? Okay. And it double bottoms on monthly M2. So I pointed that out a long time ago. And then it makes a higher high. What do you do if you happen to be a bull? You buy the higher low. This is the first opportunity. This is the second opportunity. That's just that. It's just that. So 1650 is the number, and the number is 1650. Midpoint psych level. I didn't go big, but I bought a little more. That's all. Okay. Cool. Cool. Right on. But if you use QuantBox, it shows you the better weeks to make those decisions based on 20-year norms. So I'd like to keep some powder dried. If this year is similar to seasonality, I'd like to have some powder dry. So later on, I can buy more at a lower price. But I don't know if this year is a normal year. Does anyone feel like this is a normal year? We're adding 250,000 jobs a month to our economy, and we expect the Fed to cut 6 times. You're like, what the heck? Like, people's reality is so skewed. It's just so bizarre and bewildering and strange. This year is relative to what a normal, logical, and year would be. I can't figure out where people get their opinions from. I think they're just totally guessing. And here's this interesting thing. All these experts on TV that are talking about the Fed slashing interest rates, they all have Bloomberg accounts that give you the same information that QuantBox does. Bloomberg is $1,000 a month per machine. They probably have 5 machines if it's a small firm. But let's just say they have one machine. It's $1,000 a month. Now, you're not a big institutional investor. Okay, so you can't afford $1,000 a month for research, but you have QuantBox. It's $80 a month. Like, it's so stupid, right? It should be a lot more. Just that's how it is. It should be a lot more. It's really interesting. So we're informed, and that's how we make our decisions. Cool. So, anyways, I'll leave you for today. It's going to be interesting. I think the fireworks are at the end of the day. And but who knows? I don't know when the SEC is going to release their press release that's already been released. Um, I don't know, because of the release, whether market participants just front run the whole thing. They're like, boom, that was the legitimate press release, not a hacker, right? What happened was an intern logged in and accidentally hit the send button. You're like, dude, did you just send that? Right? Like, and they're like, it was the Russians. I love it. That's the cover up for everything. Did you, right? Did you just send that? We were hacked by Russians? Yeah, that's the default answer for everything, right? Not my fault. Imagine if my kids tried that. Dude, you didn't take out the garbage last night. I told you. We were hacked by Russians. So, anyways, all right. So, anyways, $80 gives you the confidence because you're making good decisions, and because you have confidence and you know what the heck's going on. You can let your winners run. But if it doesn't work your way, you take a small loss and you move on.com. You had the right idea, just the wrong time. That's how you trade. That's how you invest. Everyone else just guesses and gambles. And you can see it in the market behavior. So don't be normal. Okay? Because normal is mediocrity. So now you have to choose: be below mediocre or be above mediocre. I choose above every day. And I know you do too. Peace on earth. May the pips be with you. May our profits be above average. And don't forget, let me bring it up one more time. I don't even have the site up open anymore, do I? Yeah. All right. I got to go back here. Don't forget. Okay. In 4 hours, 4.5 hours, we're doing the Q1 Global Market Outlook. It's going to be good. I'm going to cover stuff in QuantBox, but I'm going to cover stuff not in QuantBox. And this is a great opportunity to take the data and sort of thread and narrate sort of a story around it, because there's a lot of data, but as Confucius said, what does it mean, Basel? No, no, wait, that was Austin Powers. But anyways, I'll see you later today. Cheers. Yay.